So, as discussed in every other section, before you can even think about actually entering a trade, you need to identify what condition the market currently is in, what type of environment the market is currently trading at. So, in this video, we're pretty much going to be going over examples of consolidating or ranging markets. Typically, you have your main pattern here, which when price is in a range, this could actually vary. It really depends on the actual situation itself. We'll go over some examples and some reversals of an actual ranging market, and then we'll go on the chart. But pretty much when price is ranging, you'll have a high, a low, and that's all price is doing, is forming highs and lows, right? You'll have a level of resistance and you'll have a level of support that price is kind of just more or less failing to break. You can think about a ranging market or a consolidating market as price taking a break from really big moves. Now, you can definitely take advantage of this opportunity or many opportunities in a ranging market, but it all depends on how big the range is. Sometimes this range may be a 5-minute chart, and this move from here to here was only 20 pips, which you could definitely take advantage of. Or this move from here to here may only be 5 pips. It really depends on the range, or if you're trading a higher time frame, right? And let's say that this is a daily or 4-hour time frame, right? Then this move may be 100 pips, 60 pips, 70 pips, whatever the case may be, right? You need to identify the pattern. So typically, like I said previously, price is only going to be forming highs and lows throughout this range. Right now, there's many different ways you could tell if price is going to break out to the upside or the downside in a range. And that's, first of all, if you can identify if price had previously been trending before. So like in this example over here, right? Let's just say price was previously trending bullish and just started ranging, right? Here you have a higher high, here you have a higher low. So then price formed a high, then a low, then a high, right? Typically in this situation, you really only want to be buying at the lows. You can even stack your orders if you want to, but I would definitely select my targets to be at the highs because you don't know if price is actually going to break out. But typically, through previous back-tested history, we could see that if price is trending bullish and it starts to range, most likely it will break out to the upside. Right now, there's many different examples of this. Price may actually be trending bullish and started to consolidate, and then it broke out lower before breaking out higher. That's simply a liquidity grab. So pretty much stop hunts getting taken out of the trade, or sellers or buyers getting taken out of the trade early. So simple liquidity grab. Right now, you can also find reversals as well when price is actually starting to range. So let's say this is like a weekly key level here, right? If price hits this weekly key level, and on the 4-hour time frame, you see prices forming highs. So let's just say this was a previous higher high, this was a previous higher low, then price formed a high, then a low, then a high. If this level breaks, then definitely I would be looking to go short. You can take advantage of this through many opportunities. If this is a weekly key level, you can just sell at the highs, or you can wait for the break of the range, the retest of the actual level of support that pretty much buyers were holding. Typically, you want to see that sellers will hold this price for a continued push down. So that's the ideology behind a break and retest setup. So there's multiple ways you can actually trade this setup here. Now, last but not least is price when it ranges in a downtrending market. Typically, when you'll see price form a lower low, then a lower high, then you'll see a low, then a high. Typically, price should break out to the downside actually, but you never know what price is really going to do. So again, you have to be able to manage your risk properly and make sure you're trading with a decent risk to reward ratio, especially when it comes to like pullback setups, right? So now that we've gone over pretty much some examples, I'm actually going to go into the actual chart and identify a ranging market. So now here we are on the chart, currently looking at gold. I'm going to turn off all of my indicators here just so we can look at price action itself. Right, so the first thing you want to look at, and again, identify if price is moving sideways, right? This is a trending condition. This is a ranging condition. So the first thing you want to do, again, when it comes to ranges, they're more or less zones. So you want to draw out your highs, which would be somewhere around this level over here. And you want to draw out your lows, which would be somewhere more or less at this level down here. So as you can see, this range from the high to the low is about 70 pips. So you can definitely take advantage of these opportunities and go pretty much short on the highs and long on the lows themselves, right? Then you can see ultimately price broke above the range. As we discussed previously, price broke above the range, came back down, retested, buyers held the level of resistance that sellers were holding, right, and it's now come into a level of support and continued to go up. So again, there you have a break and retest of the actual range itself. This would pretty much allow for a great setup to actually go long here in this case. Now over here, this is another weekly key level down here on gold, which we're not going to go too far in depth on the level itself, as I'm just kind of explaining what a range is. But pretty much we have the actual low of the range being down here, and up here we have the high of the range. As you can see, price consolidated within the range itself here, right? So it's not always going to look kind of textbook perfect, but in this situation, again, you know, if price is trending downward, right, and this is a weekly key level like I've stated previously, right, so we can definitely expect a reversal, especially if price starts to consolidate like this. In this situation, what you want to do is pretty much buy at the lows, or like I said previously, you can also sell at the highs, right? But as you can see, you know, with that weekly key level, we had that rejection. But regardless of the fact, there's multiple ways you could trade this. You can have a limit order inside of the range, or you can wait for some form of a price action signal to actually take that long position. Again, your stops have to be somewhere decently under the range itself, because you will have liquidity grabs such as this one right here. And as you can see, price didn't really go for another liquidity grab after that itself. So really quick, this was just kind of a short example of ranges on a lower time frame. Now if we look at more or less a higher time frame perspective, right, such as the 4 hour, you can definitely see price was ranging here, price is ranging pretty much all throughout this level here. And again, another weekly key level, you can expect to short the actual highs themselves. But regardless of the fact, you know, you have a lot of ranges in the market, you have a lot of levels of consolidation. Typically price isn't always going to be trending all the time. Typically you're going to find price consolidating a lot more than often. So we can definitely look at this as another range here, right? Let's hit the replay tool, right? So you can see this as another level of consolidation. Again, here are the highs, here are the lows down here. So in this example, you know, the range was a good 150 pips. You could definitely take advantage of this range on a lower time frame. Again, sell the highs or buy the lows. It's really up to you. But anyways, this video was really just going over the market condition for a ranging market. And again, you have to identify what type of environment price is in before trading and setting up your trade.